You're watching Personal Finance with Coach Kelvin. Let's get into the video. Hey guys, Coach Kelvin here. So in today's video, I'm going to talk to you about the 5 passive income sources that I'll be utilizing in 2022. So I give a monthly passive income update and I try and talk about, where all my passive income's coming from every month, how much I'm making, how it's going to compare to the last corresponding month for the previous year once I've been doing them for 12 months. And I think this is a really good opportunity to kind of remind people that there are certain ways to make passive income, and you can get started with very little capital, especially early on in your investment career, and then over time this will grow into something quite substantial. So the first and easiest place to earn interest, and you don't need any minimum amounts to get involved with this, is bank interest or putting money into an offset account. So if you actually have a property and you have an offset account attached to that, by storing any of your excess funds in this offset account, this is going to reduce the amount of money owed by the same amount theoretically. So it's going to save you money against your interest repayment or your interest obligation of that month. So let's say you had $300,000 owing on your mortgage, but you had $1,000 in your offset account. You need to only pay interest on the remaining $299,000 for that month or that year, or however long you keep that money in the offset account. So that's one way we can essentially earn some passive income there. Now, using a high interest savings account, which banks also offer, you can actually place money into that, though your rate of return will generally be quite low, especially with today's current market or interest rate in the market. So for example, most high interest savings accounts are actually less than 1% right now, which is quite terrible. However, I guess you have to accept what you can get, and the highest available is super low in comparison to other asset classes. So I recommend checking out some of the next ones, which I'm going to be discussing. So another way you can earn interest income is by loaning money out and having people pay you back. So there are platforms that allow you to do peer-to-peer lending, where you might have someone looking to, borrow funds from you so they can start a business or, consolidate debt or buy a car. You place your money onto the platform, they borrow it off you, and then they pay you back with interest in a set time frame. So generally what happens is you're lending out the money and then you don't have to make any other payments. The person borrowing the money, they're going to have to pay a loan establishment fee. They're going to have to pay the extra interest repayments, which then the company which organizes the peer-to-peer lending platform essentially takes their cut from, before then paying you your interest amount. So the one I use is called Plenti. I have withdrawn most of my funds from this platform due to the lower returns on the market right now compared to, say, shares or rental income. However, obviously, if you're looking for some sort of return and you want it only locked away for, say, a small predictable amount of time, then peer-to-peer lending is very effective. So if you're looking for a link or a referral to the one I use Plenti. The link's in the description, and if you deposit $1,000 into the 5-year lending market, you'll get about a 2.9 to 3% return right now, and you'll also get a $50 bonus by using that referral link. So feel free to check that out if you're so inclined to do so. The next source of passive income that I've listed is through rental income. So you can earn rental income from a few different sources. So the first is actually from property. Now, if you obviously have an investment property, you can get a property manager to then organize a tenant to live in that property. They're going to pay a weekly amount to the property manager based on an agreed amount which the owner and the tenant are willing to transact every week. The property manager then takes their cut for management of the property. They organise any expenses, etc. out of the funds that they get with the owner's approval. And then at the end of each month, you'll receive your rental income back. So this can help you to increase your cash flow month to month. This can also help you to pay down the loan quicker if that is your goal to do so. Rental income can be quite efficient because when you have a property attached to a mortgage, all of the interest you have to pay on the mortgage becomes tax deductible. Any repairs or associated expenses with that property becomes tax deductible, and you also manage to create other tax advantages if you spend money on the property to do it up. If you want to like add an additional patio or something like that, that all becomes tax deductible, which sort of improves your cash flow at the end of financial year when you have things to offset some of your income. Rental income can be efficient in that way. However, 100% of the income you make will be taxed at your nominal tax rate. So if after all expenses you're left with say $10,000 and you have to pay the 37% tax bracket here in Australia, then you'll be looking at spending $3,700 of that and 10 grand in taxes. But that's okay, you've still made money. So the fourth source of passive income that I'm going to talk to you about today is through the dividends paid by owning shares. So when you buy companies that produce cash flow, or even the index fund which holds many companies which do so, or a real estate investment trust, or basically any asset class through the stock market, when those companies earn cash, they can return capital to the owner through a few methods: capital appreciation, through a share buyback, or through dividends. Now, dividends are the only passive income because you receive money back. You don't have to do anything to get it. You can choose to reinvest this, which can be really efficient, as often companies will offer you the new shares at a discount, and you don't have to pay a brokerage fee to accumulate them. When you receive your dividends, if you've held shares which have had to buy and sell assets within it, and let's say you have an index fund that rebalances and it's selling shares that have been held longer than 12 months and buying new ones, then some of that income that is created by the capital gains event will receive a 50% discount on the taxable amounts that you have to pay if it's been held longer than 12 months in that ETF or that index fund. So this can be really tax efficient for you, as opposed to say an interest repayment from a bank where you have to pay tax on 100% of the amount you receive. The dividends can have that 50% discount if it comes from capital gains. If it comes from money earned within the company, this will be at a normal rate, unless the share or the company also pays their tax prior to paying your dividend, which creates a franking credit. Now, this franking credit will basically be a 30% corporate tax rate, and then if you personally have to pay less than 30% on your taxable income, you'll receive a refund in your tax return. If you have to pay more, then you'll receive a credit for that first 30%, and you may only have to make up a slight difference on top of that. So dividends are one of the most efficient ways to receive passive income, and I am a huge fan of it. I can't think of any other favorable income source that I want to accumulate, so I spend most of my money accumulating my assets in this asset class, because the predictable passive income from long-term index funds is so unreal. Alright, the fifth source of passive income that I'm going to talk to you today about is something that's probably a little less popular and a little less mainstream right now, but this is cryptocurrency staking. Now, basically what staking means is when you own cryptocurrencies which use the proof of stake system, you basically put your crypto back into the blockchain to help validate transactions and speed up all of the processing times. Now, you get rewarded by doing this. So what happens is the cryptocurrency is actually minting more coins as a payment to you for the work that your currency is doing. There are a lot of cryptos out there. Not all of them are able to be staked, but some of the ones that do offer some really good returns. So for example, I did make a video recently on cryptocurrency staking where I stake Cardano and also Veracity. On Veracity, I'm staking at 19.2% per annum, which is a huge rate of return. Like, it's very exciting, but I deem that as a little less stable, and I feel like the coin price will fluctuate a lot more than, say, Cardano, where I can get a 5.2% return on my staked currency. So cryptocurrency staking works a little differently to, say, a normal interest repayment from a bank. So the price of the crypto itself can fluctuate a lot, and this can be really unsettling, because if you're earning, if your staked rewards are coming in a value that is transacted in, say, Australian dollars, and you're getting them received at a really high rate, and then the coin halves, you will still have to pay tax on that initial staking reward amount of the Australian equivalent, or the Australian dollar equivalent of that amount, despite the coin maybe halving in value or worse. So you can actually argue there's a bit of risk when it comes to the tax component of this, because you couldn't, like, there is actually a circumstance where you may not be able to sell all of the assets to pay the tax bill if you had to do so. So that's something that's really worth being diligent about, and perhaps only stake as much cryptocurrency as you're willing to have the tax liability of on that return. I always argue though, if you're going to hold some cryptocurrency, it's probably a really good idea to stake what you can to earn some more money for simply holding it in cold storage. It's definitely safer, but you're not going to earn any rewards for doing so, except for the security of, I guess, not losing your staked currency or having it in an exchange. So there you go. So guys, that's my 5 sources of passive income that I'm going to suggest you use in 2022. I myself will be using them, and it's like legendary investor Warren Buffett says, if you can't make money while you sleep, then you will work until you die. So using these methods, you're going to be able to make more money without having to do any extra work. And I think that's really important, because as that snowball starts rolling and growing, eventually you can sort of take your foot off the accelerator when it comes to work, and you'll just see your holdings continue to grow from the compound effect of that passive income. Alright guys, if you got any value from today's video, please like, share and subscribe. I hope 2022 is a very plentiful year in terms of returns for you. Hopefully you start creating some great sources of income, or at least get some money invested to get your foot in the door. Guys, thanks for watching, and I look forward to seeing you in the next video.